Hello everyone, it's Shay here, and today we're going to talk about how to identify key levels when we are day trading intraday. So first of all, what exactly is a key level? Or when we do abbreviations, it's just KL. Key levels are basically just strong support or resistance levels from the daily chart that also line up with our intraday chart, and that's often pre-market when we're planning out these trade ideas. This is also a level that determines the sentiment to the upside or downside direction of a stock, basically telling us very quickly, just at a glance, whether the stock is bearish or bullish. So that's all there is to a key level. It's not any magical level, but it's just a important support or resistance from the daily chart. I'm gonna show you examples first. How to identify the key level. So first of all, let's start with the daily levels, and we're gonna line them up with intraday levels. And these levels are often pre-market support, pre-market highs, and sometimes even previous days close. So we'll look at a small cap example, MRIN. So this was a stock that gapped up a couple of days ago. This is a pre-market chart. When we're doing these planning, it's pre-market, so we can't see any of the levels or any of these charts that's after open at 9:30, right? So pre-market, we see the stock, went to a high of $3, came back to 240s, and started going up higher, and the high of pre-market's 320s. So that's the intraday chart. So 320s, so just keep that in mind. We'll draw that first, but that's the pre-market levels from that day. And you can see if we just look at empty chart, so we're not looking at daily candle for that day yet. Yes, that pre-market high is 320s. But what do you have above it? You have above it, yes, sure, you have some levels, 320, you have above it 325, and you have above it 350s. And if you want to go even higher, you have to all the way to $4. Now, looking at this chart, this is what we call the bag holder daily charts, right? We talked about this in our bag holder daily short setup. So for a stock that's trading already at 320s, and you have resistance up there around 340, 350s on a daily. And when you're looking at a downtrending daily chart, that's the reason we're more bearish on the stock. And for us to go short on the stock, we want to use the extreme daily levels. So that's why on that day, the key level on the stock is actually around 340 or 350s, and also 325. That's another key level. So that's why the key level is basically a strong resistance area on the daily that when we line up, you can see all these lines, 350, 325, and if you look at these candles, 340s, if you line this up, that became the high when it broke out of the pre-market high on that day and went to test the high of 340s. And ideally, I think 350s would have been even better, but it never got there. I remember trying to trade on that day. But that's why this area is the key levels on that day, because the stock, if it keeps on failing all these resistance at 325, 340, 350s, that means the stock is unable to break above the daily resistance levels over here. A lot of selling pressure up here, and has downside all the way back to the intraday levels, the intraday support levels at 270 and 240s. And that's why if the stock stays below the key level, that means the stock is bearish. If the stock is below key level, it is bearish. Then you can either use a key level for entry or the next lower resistance for short entries. And that's why the key levels are always going to be starting from the daily chart. Okay, let's look at another example, a large cap stock this time around. Let's get rid of this. On Friday, when we get rid of this, on Friday, a lot of times the large cap stocks will also gap up like the drastically like the small caps we just talked about as well. So if you look at the pre-market levels, when we are doing the planning for the day, pre-market levels, the low pre-market was $43, upside is $49. So let's just mark that the pre-market highs area. So you have the pre-market highs, pre-market lows, and the important part that that's also important to make note of, is pre-market support. Sometimes you go to 2 minutes or 5 minutes, up to you. 2 minutes, I like to use that. Sometimes it's clearer. You can see this level pre-market, when it broke out above it after 8 o'clock, that's when the pre-market levels actually matter, because you have actual volume. You can see when the stock went up from 45 to 48, the time when it pulled back and actually held multiple extended amount of time for over, this is what, 20 minutes, is around this $47.40. This is a pre-market support. It's, yes, of course, it's below the pre-market low high and above the pre-market low. Pre-market support. Why? Because again, that's where the stock had pulled back and held that area and actually bounced off. And that's why this is going to be an important intraday level for support. But if you kind of look at this intraday support, $47.40. If you look at daily, what do you see? I'll get rid of this. We don't need that. Sure, you have the pre-market highs, pre-market lows. But if you look at this $47.40, that's also a daily. First of all, this area was a daily resistance, right? You can see the wick on the daily. Quick review, video lesson from how to draw support and resistance on the daily chart. We look at the wicks on the top and the bottom, correct? This is the wick on the top, $47.40. Close enough, or you can call it $47.20. Sorry, I'm short 10 cents. And the wick at the bottom around here, this day and this day, wick in the same area, which is $47.20. And again, right here on this day, the daily level, the wick at the very bottom, $47.50. And I mean, all of these daily charts have volume, right? These are trading like 20 million volume on the day. So these are not low volume stocks. And another level down here, $45, right? $45. But again, what we're looking at is this pre-market level. Pre-market level, that's going to be the key level for the stock, because it bounced off pre-market when the stock pulled back and bounced off to make a new high. And at the same time, that $47.40, that's a level that's been tested on the daily chart, proved to us traders that it's been tested multiple times, both as resistance up here, support down here, support again, and resistance up here. And that's the reason when it lines up with the daily very clearly, that's going to be the key level on the day. So you can see, yeah, $49 a stock. That's going to be the pre-market highs resistance. The stock tested that resistance, broke down key level. That's the reason I went short the stock, because the stock broke down the key level and has downside all the way potentially to $44, the pre-market lows. But the stock actually held the small level around $46, which there was no level from pre-market that showed us that was going to be a level. But if you really want to look at it in hindsight and kind of analyze it further, that $46 level, let's just call it that, that's also another level here, and a small support level on the daily as well. So once the stock curled around that level, actually reclaimed the key level, and once it starts reclaiming and started trading above it, then the stock is no longer bullish. No longer bearish, right? It was only bearish because it broke down that level very early on. And then actually rejected again here, second time, rejection here, and the third time that reclaimed above it. And once key level is reclaimed, they become bullish on the stock. So that's the importance of using key levels. It basically is a level that helps you determine the sentiment for the stock, whether that's bullish to the upside or bearish to the downside. And this is the same way for both, like we talked about earlier, small caps or large caps. And quick review, we start from the daily chart levels and we line up with the intraday levels. Most of the time, it's going to be pre-market support. Sometimes that's going to be pre-market highs and even previous day's close. So that's how you identify the key level for intraday trading. Now, the second part of this lesson is I get this question a lot. Number 3, which you're reading right now. What happens if the stock moves away from the key level planned out pre-market? And yes, that tend to happen, especially if the stock stays very strong. It's not often that we see the stock break down key level and come right back over at around 10 o'clock and go straight to highs. But in this example, the stock, once it reclaimed the key level, it went all the way to the next daily levels. So if that happens, you just have to remember that if it's above the key level, you only use that key level as a sentiment. So it's bullish, right? Once the stock reclaimed that key level, $47.40, it became bullish. Then when you're trading, you want to go long on the stock since it's bullish, you're just going to have to use the next level support that's higher than the key level for long entries, which are essentially higher lows. And you'll use the method of how we draw the intraday levels, which we have taught in the previous lessons on drawing support and resistance levels intraday. You'll use those same levels for long entries. So you can't really expect the stock to come back all the way back to key level for your most ideal entry. You just have to use the higher lows, which in this case, if we do some really quick technical analysis, the wicks up here, this is a 2-minute chart. The wicks that was on the top later became the small support for potential long entries. And also the pre-market highs up here, right? Pre-market highs, $49.50. Once that's been broken above, those are the ideal entry and the risk levels to go long on the stock, to see the stock higher to the next level up all the way on the daily chart. But that's how we find, we kind of covered how to find these daily levels in the previous lessons. In many sense, if the stock keeps on staying above and going way above the key level, that's actually a good thing. It just means the stock is extremely bullish. It's very, very strong, and it's never pulling back to the key level. And that was the case for SPCE. It never really retouched that same $47.40 level after 1010. When it reclaimed, just never came back down. I remember I was trying to see if it's going to pull back for me to go long on the stock, but it never did. So I could only use very, very small position sizes, which that's also the frustrating part as well. But sometimes you just have to get used to the fact that if it keeps on staying above the key level and never coming back, 48 all the way to 56, that just means the stock is extremely strong. And every single dips are bought back up. And this will be the same idea for if the stock is trading way below key level. It's very bearish. So a good example, I think, would be, let me think. MRIN is not really a good example because it actually reclaimed. Let me check really quickly what stock did I short recent. So here, I remember shorting a stock on this day. We're going to use a small cap stock for this example. So if we look at this day, let's just go through the process really quick. When the stock had, this small cap stock has some PR, and the stock went from $5.50 previous day close to $8 almost, pre-market highs. That was going to be $8 pre-market all the way up here. Right, and it sold off down to pre-market support right here, 640s, right? That's also close enough to the daily wicks up here. Went to retest a lower high pre-market, $7.10 up here, and it never came back. And I remember on that day, the key level was ideally gonna be 740s. I remember it's going to be 710, 740s, this area. So I had the key levels planned out. And the stock just never went back up to key level, 740s. And I remember I was like, ideally $8. It just never went there. But, I know it does seem like, oh, you missed your ideal entry. But you also have to kind of think of it this way, that if a stock keeps on trading below key level, that means it's very bearish. It's very, very bearish. Then you want to look for next lower resistance. Well, technically, sorry, would that be lower? Yeah, lower resistance. So basically lower highs for short entries on bounces. So for me, after seeing the stock, if you look on the 2-minute, after seeing the stock never coming back to test that 710 or even $748, it spiked to the highs and pulled back to the pre-market support. I always want to wait for bounces, but this time around I see it bounce to a high of only 680s. That's where I entered. It does look like, it's not ideal because it's not 710, it's not 740, it's not $8. But this is technically a lower high. It's even lower than the opening spike, and it's lower than the pre-market levels. So you just have to use the extreme key levels, 740s, as a sentiment. It's below 740, so it's bearish, and I'm looking for lower highs to short into this. So I shorted here. And once I broke down the pre-market support, you can see it just tanked even further down to almost where it came from, which was 550s. So in many ways, if it keeps on going away from the key levels, it's a good thing. That just means the sentiment is extremely bearish for the stock. And you just have to look for, the next, if you're short bias, in the lower highs and lower resistance levels for short entries. Essentially, you're joining the trend to the downside on the stock. You want it to stay lower highs, lower highs, lower highs, lower high, lower high. These are all potential short entries. And on the other side, if you are more bullish, if the stock is bullish, then you want to look for higher lows, higher lows, higher lows, higher lows for entries on the long side. So quick review. So this is how you find the key levels that will determine the sentiment for the stock, whether it's bullish or bearish. Always start with the daily chart levels. And once you have that, line them up, the daily levels, with your intraday levels. That's often going to be pre-market support, pre-market highs, and sometimes even previous day's close.